Imagine for a second that you are running on a treadmill. You are sprinting. Sweat is pouring down your face. Your heart is pounding out of your chest. You're working harder than you ever have in your life. But when you look down at the console, you realize you haven't actually moved forward an inch. In fact, you're actually slightly further back than where you started.
That is a terrifying image, isn't it? But
Yeah.
it's the perfect metaphor for what happens to a business during a period of really high inflation.
Exactly.
You can move more boxes, sell more goods, handle way more cash, but the purchasing power of that money just it dissolves before you can even count it.
Welcome. Today we are looking at a giant that is currently running that exact marathon. We're analyzing the 2025 annual report for Selçuk Ecza.
This is a massive pharmaceutical distributor. I mean, this is a company that literally keeps the healthcare system supplied, but their latest numbers tell a very, very complicated story.
Yeah, story about inflation, debt, and well, survival.
It's a fascinating case study for the retail investor because it really highlights the difference between making money and keeping value. We're looking at the period ending December 31st, 2025.
Right, and we should probably put a note on the currency here.
Yes. So normally we try to convert everything to US dollars for our audience, but this report uses something called TMS 29, which is inflation-adjusted accounting.
And we don't have a verified exchange rate for that specific date in the report.
Exactly. So if we tried to convert it, we'd just be guessing. And we don't do guesses here. So to stay accurate, we're sticking strictly to the Turkish lira figures in the report.
Okay, that makes sense. Facts only. So let's first get to know the company a little before we dive into this scary math. Who exactly is Selçuk Ecza?
Well, they're an absolute institution. The story starts way, way back in 1958 in Konya.
Wow.
Yeah, it began as a small operation, but by 1970, they evolved into a collective company. Today, their headquarters are in Istanbul, in the Üsküdar-Kızılay district.
So they've got history. But what about their actual footprint? When we say they're big, I mean, how big are we talking?
Think of them as the circulatory system of the country's entire drug supply. They connect the drug manufacturers to the hospitals and pharmacies.
So they're the middleman.
The essential middleman. Structurally, you have the parent company, Selçuk Ecza, and its subsidiary as Ecza. Together, they operate this huge network.
I was looking at the numbers. Selçuk has 116 branches, 73 regional depots, as Ecza adds another 4 branches and 10 depots. I did notice, though, a slight decrease in branches compared to 2024. Is that a red flag?
I wouldn't call it a red flag. It's more calibration.
Yeah.
A tiny contraction like that usually suggests they're just optimizing their logistics, not aggressively expanding.
Proving the fat when the economy gets tight.
That's it. You don't build new wings on the mansion during a storm.
Makes sense. Now, what about ownership? Who's actually driving this bus?
It is very much a controlled company. The majority owner is Selçuk Ecza Holding. They hold about 77% directly, but then they've bought up more on the market. Oh, okay.
Bringing their total control to roughly 82.42%. So public float, what you or I could buy, is only about 20%.
So we're definitely just along for the ride. And speaking of the people in the driver's seat, I always look at the board of directors. Did the report mention the gender ratio? How many female board members?
You know, I looked for that. The source material doesn't actually list the number of employees or the specific breakdown of male versus female board members. It's a bit of a data gap.
That is a shame. Transparency is key. But they were transparent about one thing: money. Specifically, how much the bosses got paid.
They were. For this period, senior management benefits totaled 261.5 million TL. And here's the interesting part. About 104.7 million of that was bonuses.
Over 100 million lira in bonuses. I imagine some listeners might bristle at that, especially when we get to the bottom line result in a minute.
It certainly raises an eyebrow. But, before we judge, we have to look at the sector. There's the pharmaceutical warehousing. It's incredibly high volume, razor-thin margins, and the stakes are immense. Right. If they fail, people don't get their medicine. It feels like a very defensive business.
It is. I mean, if we did a quick SWOT analysis, their strength is obviously that massive distribution network. And as we'll see, they've successfully cut their debt.
But the weaknesses?
They're glaring right now. Thinning margins and, they're just so susceptible to this monetary loss from inflation and the threats. Well, the biggest threat is the high inflation environment itself.
All right, I think that's a good foundation. Let's get into the numbers. And I want to warn our listeners, this income statement is a bit of a roller coaster.
It really is a wild ride. And remember, all these figures are inflation adjusted to December 31st, 2025 purchasing power.
Okay, top line, revenue. They brought in 172.01 billion TL.
which is an increase from 168.35 billion in 2024. So technically they sold more, the trucks are moving.
But here's the catch. The cost of doing that business, it went up faster. Cost of sales hit 157.8 billion TL.
Exactly. This is that inflation treadmill. Your sales go up a little, but the cost to buy the medicine from manufacturers goes up a lot. It creates this scissors effect on their margins.
And that scissor effect is obvious in the gross profit. It dropped. It was over 17 billion TL in 2024, and it fell to 14.2 billion in 2025.
That's a steep decline. And then it gets worse when you look at their operational expenses. Marketing expenses jumped to nearly 8.9 billion, general admin up to 1.78 billion. Fuel, wages, electricity.
Everything costs more.
Yeah.
So you have shrinking gross profit and rising bills. I'm guessing that's a disaster for operating profit.
It is. Operating profit just collapsed. It went from 5.96 billion TL in 2024 down to just 2.07 billion in 2025.
Wow.
Yeah. They are working 3 times as hard to make 1/3 of the profit they used to.
But wait, the headline number?
Yeah.
The one that probably made investors choke on their coffee? Is the net profit or loss?
Yes. For 2025, Selçuk Ecza posted a net loss of 379.8 million TL.
That is a massive swing.
Yeah.
They had a profit of almost 2.7 billion the year before. They went from making billions to losing hundreds of millions.
The earnings per share went from positive 4.33 lira to negative 0.61. If I'm a shareholder looking at my portfolio app, I am panicking right now.
Okay, but hold on. This is where we have to be the voice of reason. If you just look at that loss and sell, you might be making a huge mistake. You have to look at why.
Precisely. This is that aha moment. If you look closely at the statement, there's a line item called Net Monetary Position Losses. It shows a loss of 4.87 billion TL.
4.87 billion. That's enormous. That's more than their operating profit. Explain that to me like I'm 5. How do you lose 5 billion lira without actually spending it?
Okay, imagine you're holding a block of ice in your hand on a really hot day. That ice is your monetary assets cash in the bank. Money people owe you.
Good.
You didn't drop the ice, you didn't spend it, but because of the heat, which is inflation, the ice simply melted away.
So the purchasing power is just gone.
It's gone. In accounting terms, holding monetary assets during high inflation results in a loss of real value. That 4.87 billion loss isn't cash leaving the bank account, it's the value of their assets evaporating.
So the business operations actually made money, but the inflation accounting wiped it out on paper.
In a way, yes, it's a real loss of value for the shareholder, but it's not a cash outflow, it's a wealth reduction.
That's a crucial distinction. It also explains something else that confused me. Despite reporting this loss, they paid a huge tax bill.
Oh, the taxman always gets his due, yes. They paid a current tax expense of 1.6 billion TL.
How is that possible? How do you pay 1.6 billion in tax on a loss?
Because tax authorities don't always accept the same inflation adjustments. The loss of 4.87 billion was an accounting concept. The government likely looked at their operational income and said, "You made money, now pay us."
Ouch. That is a double whammy.
It's painful.
Okay, let's switch gears to the balance sheet. The health check. How are their vitals?
This is where the story gets really interesting. It seems management saw this storm coming and decided to hunker down. I'd call it defensive management.
How so?
Look at their financial investments. In 2024, they had nearly 12.9 billion TL in funds and things like that. A nice war chest. In 2025,
Let me guess, it's lower.
it dropped to 4.6 billion TL.
Whoa! They sold off the family silver. Why?
To pay off the credit card. Look at their short-term borrowings.
I'm looking. Oh my. In 2024, they had 9.7 billion TL in short-term debt. And in 2025, it's down to just 670 million TL.
They almost completely wiped it out. It's a drastic, aggressive move. In a high-interest environment, holding debt is suicide. So they liquidated their investments and cleaned up the balance sheet. They de-risked the company.
Okay, that's the good news section. But there is a number here under assets that makes me nervous. Trade receivables.
Ah, yes. The key audit matter. The auditor specifically flagged this as the biggest risk.
The number is 42.56 billion TL.
And to put that in context, that is 52.6% of their total assets. More than half of the entire company's value is just money that pharmacies owe us.
That seems incredibly risky. I mean, they're collecting from thousands of small pharmacies, right?
Correct. And this changes how you view the company. It means Selçuk Ecza isn't just a logistics company. They are effectively a bank for the entire pharmacy sector.
So if the economy gets really bad and pharmacies start going bust,
Right.
that 42 billion is at risk.
Exactly. If the local pharmacy can't pay its bills, Selçuk takes the hit. It's the biggest anxiety point on their books.
Let's talk cash flow. You always say profit is an opinion, cash is a fact.
That's the mantra, and this is the plot twist. Remember that net loss of $379 million we talked about?
Hard to forget.
Well, their operating cash flow, it's a positive 10.15 billion TL.
Wait, what? They lost money on paper but generated $10 billion in cash.
Yes. This proves our theory about the inflation accounting. The net loss was driven by non-cash adjustments. The actual business buying drugs, selling drugs, collecting money generated a ton of cash. It's a huge turnaround from 2024 when it was negative.
That is a massive relief for investors. The engine is still working. So where did all that cash go?
It went to the banks. Financing and activities show an outflow of about 9.3 billion TL. They used that operating cash plus the money from selling their investments to pay down all that debt.
So they're choosing safety over sparkle.
A very disciplined approach. They're sacrificing short-term growth to ensure they survive.
Did they spend any money on anything else? New projects?
A little, about 704 million TL on tangible assets. They're building a pocket depot in Aksaray and doing some renovations.
And vehicles?
They bought some new ones, sold some old ones. It's just fleet maintenance, really. They're just keeping the trucks running.
Okay, the footnotes. I feel like that's where the skeletons are.
There are a few things. First, legal. Provisions for lawsuits rose to 15.7 million TL. And there's a note about a competition board investigation.
That sounds ominous.
Something to watch. No specific penalty was finalized, but when you're this big, the government is always watching you closely.
So what about shareholders' equity? With the loss, did the company shrink?
Slightly. It went from about 30.75 billion TL down to 29.97 billion. It's not a collapse, but it's that gentle erosion again, the melting ice.
Okay, let's bring this all together for the retail investor. What's the narrative here?
The narrative is safety first. The net loss is painful to see, but management has effectively saved the company from being crushed by debt interest. They looked at the economy and said, we need to clear the decks.
That's verdict.
The company is safer today than it was a year ago because the debt is gone, but it is less profitable because margins are being squeezed. It's a trade-off.
They sacrificed their war chest to cut the debt anchor.
Exactly. And for the listener, take comfort in the cash flow. The business is generating 10 billion TL in cash. That's a heartbeat. As long as that beats, the patient is alive.
Here's a question for you and for our listeners. If you were the CEO, would you have done the same thing? Paid off all the debt? Or would you have kept the cash? Bet you could outrun the interest rates and invest in growth.
That is the multi-billion lira question. In high inflation, cash is trash, but debt is an anchor. They chose to cut the anchor. It's conservative, but personally, I think they made the right call. You can't grow if you're dead.
Right. It leaves them standing when the dust settles.
Yeah.
One final thought. That 52% of assets in receivables, the IOUs.
Yeah. We basically have a logistics company that is lending 42 billion lira to pharmacies.
It's a systemic risk, isn't it?
It is. They are carrying the risk of the entire pharmacy network on their shoulders. If the pharmacies catch a cold, Selçuk gets pneumonia.
Is that a risk you're comfortable taking? That's for you to decide. If this deep dive saved you from reading 60 pages of dense financial reports, please hit that like button. It really helps us out.
And subscribe so you don't miss the next analysis. We have some really interesting ones coming up.
Share this with your investor friends who might be panicking about that net loss headline. Maybe talk them off the ledge.
And if you want to support the channel's ongoing videos, you can consider becoming a Wormister member. It goes a long way.
You can also show your support via Super Thanks. We appreciate every bit of it. Thanks for listening, and we'll see you on the next deep dive.